Stay tuned for Butler on Business, coming up next on the Liberty Express.
John Rubino, dollarcollapse.com. Go there now. Pull it up. You can go on down towards the bottom and order your own copy of The Money Bubble. John, how you doing?
Great, Alan. How are you?
I'm fine. John and I were talking about he had some out-of-towners staying with him. So they've come and gone and life is back to normal?
Yeah, to the extent that it's ever normal here, life is back to mostly normal.
Well, let's switch gears and talk red meat. We'll start with the second one first. Back on July the 28th, you on dollarcollapse.com, the article is entitled, and that's a good thing. And we were talking about these all these elevated levels that we're seeing in all kinds of things that normally the media will tout as being just fantastic, but below the surface, it could be a harbinger of some tough times ahead. What's your reading on things like margin debt, corporate debt?
Well, everything hit really extreme levels in the past year. As you said, margin debt's through the roof, but not just about everything else is too, because we had all the major stock market indices hit record levels and then just blow right through the records and keep on going for a while. And corporate debt is through the roof, and we're borrowing more and more money to buy cars than we used to. Student loans are still really, so we've been taking on extremely large amounts of debt. At the same time, the financial markets have been acting like good times are here again and will continue. And junk bonds, one of the hottest markets of the last few years. The yield on junk bonds in the U.S. Fell from like 11.5% to barely over 5%. An extremely low yield for these risky bonds. And the highly risky parts of the financial markets seeing a disproportionate impact from that. The riskiest stuff is starting to go down now, whereas for the past 3 or 4 years, the riskiest stuff has been the things that have gone up the most. So when the stock market has a big correction, this is what the beginning of it will look like. I'm not saying I have any idea whether this is the start of a major correction that might turn into a bear market, but this is how it'll feel when it happens. So we might be seeing the beginning of a bigger event in the financial markets. And you know what? It's about time. This is one of the longest stretches that the U.S. equity markets have ever seen without at least a 10% correction. So we're due, even leaving the craziness of the world right now and all the debt that we're taking on, et cetera, even leaving all that aside, just for technical reasons, we're due for a stock market correction. And so it wouldn't be at all a surprise to see the next few weeks be pretty horrendous for stock market investors and pretty nice for short sellers, finally.
Well, you are the third person I will have asked this question of so far this week, and right now I'm 50-50. Could it be, though, with the Fed trying and other central banks trying to keep the markets elevated to the extent of which they've gone to creating money to buy equities, could it be we're one comment away and the market reverses course and goes on to make a new all-time high?
Oh, yeah, because that's what they'll do. When the stock market looks like it's getting ready to fall hard, then you'll see the central bankers of the world come in and try to reassure everybody, because it's crucial to them to keep the equity markets rising, because they have this idea that if our stock portfolios are going up, then we'll feel confident and we'll buy lots more stuff, and that'll keep the economy growing. And vice versa. If we feel poorer because our portfolios are down, then we'll rein in our spending and the economy will contract. And so the governments are so deeply enmeshed in the financial markets now that they treat the stock market as a policy tool, which is, it's fundamentally wrong on so many levels. But that's what they're doing now. That's how far gone they are in terms of sheer desperation after 3 decades of horrendous policy mistakes. But so if the stock market starts to fall, we will definitely see, first of all, the central banks come in and make an announcement in a heartbeat. And then if that doesn't work, if the markets keep falling, then they'll come back in with some kind of really aggressive quantitative easing again. They might call it a different name. name, but it'll be basically the same thing. Creating a whole bunch of currency, dumping it into the financial markets, and in that way pushing up asset prices. So since there's no limit to how much new currency and new credit that can be created by the world's central banks, and if that money is mostly directed at equities, there's really no limit to how high equity prices could go. So we're in a time when traditional valuation measures don't matter so much because you've got this huge source of liquidity out there that hasn't existed in times past. And that makes predicting short-term fluctuations in the financial markets completely impossible because you're not dealing with fundamentals anymore. You're dealing with four people sitting around the table in some New York City high-rise and then arguing about what they should do, and then the strongest personality winning, and then them doing whatever that person wants to do. And we have no way of knowing what it's going to be. I mean, historically, it's been liquidity. They've responded to every crisis with new money that they just dumped into the system. So it's a reasonable bet that they'll do that again, but the exact form and the timing of it are completely unpredictable. So, maybe the stock market drops by, 5%, and that triggers some kind of huge reaction from the world central banks. Or maybe they wait for 10% before they come back in and try to stop it. And there's no way to know this because it's down to the individual decisions of people under pressure. So they'll do something like that. And whether it works or not is anybody's guess, but it's reasonable to expect at some point a big market correction, and it's reasonable to expect the world central banks to respond to that with lots of new currency creation. So that part of the story is kind of, at least based on history, fairly easy to predict, but we have no idea when it happens and the exact details of it when it does.
Let me run this by you. I know that the wealth effect is one of the reasons given for creating money and dumping it into the markets. But I think of interview after interview I've done with people, for example, Neil Borowski, the guy that was the inspector general who oversaw the TARP program, and both on and off the air. I mean, he shared some of his, at times, heated conversations with Timothy Geithner, and bottom line was this was never really about the economy, never really was about the American people. It was all about allowing the banks to earn their way out of their insolvency. And since because you and I are not the beneficiaries of 0% interest, we're not able to go out and borrow unlimited sums of money to buy equities and other assets. Could it be that it's for the wealth effect, but in reality, they're trying to let the banks continue to earn money? I mean, it is a privately owned banking cartel, the Fed, and their mission is the cartel.
Oh, yeah. Well, that's part of the same story, because they see a solvent banking system as crucial to the stability of the global financial system. And, of course, the reason they see that is because they're bankers. These are the people who pay their bills, so, of course, they see the world through the self-interest of the banking community. We could have easily, back in 2008, 2009, let the big banks fail and then direct the same amount of money that we directed to bailing them out to bailing out individual people in the U.S., and the economy arguably would have been a lot better off had we done that. If we just paid off everybody's mortgage, for instance, and then let Goldman Sachs and J.P. Morgan Chase and Citigroup go bankrupt, liquidate, the traders, the derivatives traders could be driving cabs right now, doing something productive, and there would be the same number of factories, same number of hospitals, same number of farms today as there were back then. So the real wealth in the system wouldn't have gone away. Just the financial wealth would have evaporated. So we didn't do that, and we will continue not to do that because the banks are basically in charge of the government right now. So yeah, the wealth effect is the policy rationale for a lot of what they're doing, and they probably believe that it's an important lever and it's an important goal. But at the bedrock of their perception is the idea that the global banking system has to be maintained, has to be kept solvent, because to them that's the world now. That's the environment in which they live, and they can't imagine a world in which we don't have these multi-trillion-dollar asset banks with prop trading desks that move markets and CEOs who are household names and immensely powerful people, et cetera, et cetera. They can't imagine a system that's not like today's system, because that's the world they've grown up in, and that's the part of the world that pays their bills. But what has to happen eventually is, because this is a dysfunctional system now, is that it has to fail in some way, because you can't continue to do something that doesn't work forever, because eventually the problems that flow from doing the wrong thing over and over again become overwhelming, and so that'll happen to the global banking system. We can't have these big, giant, too big to fail banks continue to grow like this. They can't continue to get bigger and bigger without a crisis coming along that eventually wipes them out or forces the government to nationalize them at the cost of another $50 trillion in debt taken on around the world, which will then shift the problem over to the currencies of the world. And then we'll have a gigantic currency crisis. So the banks will be maintained, but our currencies will fail. So and details. When does it happen, and exactly how does it happen? But we can't know that. But we can know that at some point this system fails. And my guess is that it's sooner rather than later, just because the numbers are so huge now. We owe insane amounts of money. If you add it up and count the debt honestly, in the U.S., the total debt in the U.S. system comes to $2 or $3 million per family of four. So obviously, that's not something we can maintain for very long, because somebody's got to pay the interest on this. It has to come from somewhere, and obviously, it's not going to come from the average family of four. So, one way or another, we have to either wipe the debt out by lots of people and lots of entities going bankrupt, and the debt being wiped out by default, or we have to lower the value of the currencies to the point where we can pay this debt off with cheaper dollars and euros and yen, and that's it. And we're trying the second option. That's what we want to happen. But there's no guarantee we can get from here to there without some kind of horrendous currency crisis or debt collapse or something else. We just probably can't engineer a global currency reset without it being prompted by a huge crisis and then leading to hard times on the way. So that's our future. Some kind of crisis that leads to some kind of a currency reset, and possibly gives us a sustainable economy after we do it all, or possibly gives us some kind of dictatorship when things get so bad that everybody just is willing to put their lives in the hands of strong leadership in order to stop the bleeding. And so the debate on the political side, I think, is going to be a lot more interesting than the debate on the economic side, because kind of, by taking on all this debt, we've baked a crisis into the cake, but how we respond to it remains to be seen, and that's where we will get to argue about it, and we'll get to vote on it. And hopefully the forces of limited government and sound money will win out in the end, but there's absolutely no guarantee that that's how it turns out.
I wish there were a political debate on it. It sure doesn't seem to be.
No, not yet. We're still we're still living in the twilight zone of easy money. When the government can just create as much money as it wants to and spend it on anything it wants. So, in today's elections, we still have this debate that is starting from the premise of, well, we're the richest country in the world, therefore we should be able to, and then fill in the blank of your favorite program. And that's a completely meaningless debate, because we're not rich anymore. We're actually almost insolvent. We owe more than we own.
We are insolvent.
Yeah. And we're hiding that fact with a printing press that allows us to create more fictitious currency. And so we're able to pay our bills in that currency in the near term. So we can maintain a global military empire that costs us $1 trillion a year and allows us to station soldiers in 100 different countries and do all the other crazy things that we've been doing for the last 20 or 30 years around the world. And at the same time maintain an entitlement state that costs another $1 trillion and some dollars a year that offers, purports to offer health care for every single person in the country and a nice retirement for every single baby boomer that turns 65. We clearly can't afford to do all of this stuff. And yet we're doing it by creating fictitious currency that the world will still accept for a little while longer. And the political debate only gets real when we hit our limits, when we find out that we can't create unlimited amounts of money and pay for all this stuff. Either the rest of the world won't take the dollars anymore, or companies in the U.S. start going bankrupt, and we can't stop them from going bankrupt because they're just too far gone, and we end up with something like the 1930s. Whatever, something will happen to change the terms of the debate, and then we'll have to sit down as a country and figure out what our priorities are. Do we want to maintain the global military empire, and to do that, will we cut back on entitlements? Or vice versa, or are we going to cut back on everything across the board? Whatever, we have to figure out some way of living within our means, and doing it with real money, not fictitious money, because that concept is going to be discredited at some point in all of this. And so then the debate gets interesting, because then we can pull out constitutional principles versus Marxist principles, and have that debate, unlike the last 30 years when it's been all make-believe because we thought we had unlimited money. Now we'll have to design a system that lives within real-world limits. And I think that's going to be fascinating. I'm not optimistic about how it turns out, but I think the process is just going to be riveting. All of a sudden the TV news will be consequential again. And so we'll live through extremely interesting, turbulent times in the next 10, 15, 20 years. And, where we end up and what kind of a country we hand off to our kids, who knows? But I think the possibility, at least, is there to give them something that is sustainable based on individual freedom and sound money and limited government. We'll see. But I'm actually looking forward to that debate, because right now it's painful to listen to politicians talk, because not that I do that very often anymore. I mostly just tune out the whole political side of the debate. But when a politician does get through my filter, it hurts to hear them speak, because they have so many false premises, and they've been living in such a dream world for such a long time. What they say doesn't make any sense.
I remember talking to a guy that was a staffer for a Georgia congressman whose name will go unmentioned, and I was telling him, off the record, I was really disappointed at the fellow's lack of economic acumen. And he said, yeah, these guys are about one slide deep in the presentation. And so, which I thought was a good way of putting it, that they really, you get them outside their talking points, why you don't get a whole lot of substance there.
No, you don't get the idea that these guys actually understand, even when they talk about, the Constitution this, or and anything else. When they talk about this stuff, it's at such a surface level that they got briefed the other day on the subject, and so they have their talking points, and that's really all they have, and that's really the level of political discourse almost across the board. So yeah, it's painful to listen to, and it'll change. At some point. We'll go back to the days of the 1800s and the early in the 20th century, when monetary policy was actually a topic of debate.
I was getting ready to bring that up. I was going to bring up that point.
Yeah, there was a time when people actually attempted to understand this stuff. And came to conclusions that were mostly pretty sound. The formation of the Federal Reserve being a notable exception back then, but mostly people understood that money had to be this real thing that was unchanging, like a yard or a second or a year. These units of measurements don't change, and we live within that structure, and that makes our communication over time understandable. If an Olympic sprinter ran 100 meters in such and such a time 20 years ago, and they're running a different time now, we know what that means, because we aren't changing the unit of measurement. But if we changed the definition of a meter year after year after year, then people's times from the past wouldn't make any sense. We would be dealing with an incomprehensible universe there in track and field. And it's the same thing in money now. When we change the definition of the dollar year after year after year by making it less and less valuable, by over creating dollars, then it makes economic communication really difficult, and it leads to bad decisions. People just can't figure out what their return is going to be in the future, and so they overestimate what they'll make, and they build factories they shouldn't build, or they'll underestimate what they'll make, and they don't build something that should be built. You get all this malinvestment.
John, I'm running out of time, buddy.
Okay.
All right, this is John Rubino, dollarcollapse.com. I'm Alan Butler. I'll see you tomorrow. Thank you for listening.